The benchmark Kospi dropped nearly 1.5%, and the secondary bourse took a beating, activating a mechanism similar to the Chinese market circuit breakers. Hwang Ji has this report.
Korea's tech-heavy KOSDAQ saw shares nosedive just before lunch, shedding as much as 8% at one point on Friday. This triggered a sidecar, which is a circuit breaker that suspends share transactions for 1 minute. The bourse closed down 6%. Korea's benchmark Kospi also ended 1.4% lower, continuing its downward streak after one of the country's biggest national holidays, Lunar New Year. Over in Japan, the Nikkei closed down over 5%, dropping below the psychologically important 15,000 mark. All this comes after the S&P 500 overnight fell 1.2% to its lowest close in almost 2 years and down over 10% for the year. The global equity rout has been prompted by the slowdown in China, as well as measly demand and wobbly performance in other emerging markets on the back of faltering crude oil prices. Sentiment this week was further subdued after U.S. Fed Chair Janet Yellen expressed concerns about the U.S. economy. Worries also linger over how monetary easing policies of central banks will impact markets down the line. The Bank of Japan, in addition to the European Central Bank, has introduced negative interest rates, and investors are concerned that policymakers will have less wiggle room in a protracted downturn, and the bottom line of banks will be challenged. Financial shares actually led the recent losses in world markets. With that, some are worried about the possibility of a major financial crisis like the one back in 2008, but not everyone expects those conditions to resurface.
Financial institutions are in better shape in terms of financial health compared to the past, and that means it can handle more losses.
Still, experts in general do agree that policymakers should keep a close eye on the situation, as nothing is really foreseeable in times like now. Hwang Ji, Arirang News.